Run it, I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Alright folks, welcome back to Who's Your Boy Trades. Tonight I'm going to talk a little bit about how I trade every day, some of the mindset that I use, and the things that I practice every single day to become a successful trader. It's imperative to remember these things.
Let's get this money.
Alright, so if you started following me on YouTube recently, you've noticed, I've been calling some nice pivot points on, and we've been making a lot of money, off this price action the last couple weeks since I started, posting content on YouTube. The way I trade is based off, volume profile, market auction theory, and, order flow. That's all I use. I watch futures, I watch the tape, and I take entries on SPX based off of, futures. So we know every single trade has an imbalance in conviction. There has to be buyers waiting to pay higher prices for the bid to go up, and there has to be, sellers to offer it lower, an overwhelming amount of sellers, and, no buyers willing to pay $1 over the price we're selling off from. We know we were targeting 38.90. If you watched my last few videos, we did punch a little bit over 38.90 yesterday. And you know what? We shorted 38.90 and we're still sitting short now. And we've caught a nice, downside move the last couple days. We have, trimmed some of these positions, and we do have some runners because I am expecting a little bit lower. I'm looking for 37.05, between 37.05 to 37.40. I mean, the potential to go back to lows is there, but I don't think we're going to see that low. We'll see how the action plays out in the next couple days. But either way, what I'm talking about is dynamic traders, the billionaires, the hedge funds, the institutions, the people that can, move the markets with, their trades. They got the financial and psychological backing to move the market. That's, they can bid it up or they can offer it lower. Following these traders, how you make money in the market, regardless of what the media, CNBC, or any other news outlet's telling you. There can be terrible news on a stock, and if people are willing to pay higher prices for that stock, it's going to still rise. Following these traders is how you definitely make the most money, though, regardless. Regardless of what type of lines or what type of indicators we put on our charts, at the end of the day, it's all about, understanding what big money and institutional traders are doing. As far as, us, we're retail traders or technical traders. We're simply trading what big money's perception of what is high and low. At the end of the day, that's all it is. We're completely dependent on what they are doing with their money. All of our wins come from somebody with a ton of money paying to move the market in their direction. As far as, this is, like I said, this is why I don't believe in a ton of indicators. I still use them occasionally, and I'll still, occasionally put up a channel just, for basically the visual aid of where the market is, balancing in, but I'm not using that to take entries. So as far as my next thing I want to talk about is, I don't take entries based on artwork, like I said, but especially in a bear market, we tend to open higher the next trading day before we go lower. It's kind of funny how that happens, because futures traders will bid the market up and then they'll turn around and sell it off. And that happens very often in a bear market. In a bull market, it'll tend to open lower and then it'll get bid up. It's funny that more often than not, that's how it goes. But that's, if you pay really close attention, you'll see that more than half of the time, that's what happens. All it is dynamic traders bidding the market up to shake out weak hands. These traders will then take the other side of the trade with a better entry and ride the wave. So this is why retail traders, we do have to use stops. Unless you have unlimited financial backing, it's imperative that you still use stops. I'm not saying, have complete conviction in a losing play and just sit in there and lose all your money. That's not what I'm saying at all, because that's a terrible plan. And you don't know how low, you don't know where the market's going to go next. Unless you can, unless we had the ability to read minds and, like I said, unlimited financial backing, that's just not the way it is for retail traders. The news gives us their version, and it normally sounds reasonable, but all that matters is what the big money traders are doing at the end of the day. All right? Whatever the big money traders and institutions are doing, that's going to determine which direction the stock or the market in general is going. However, regardless of all of this, you must have conviction in your trades and not make mistakes. Execution is everything, all right? Do not hesitate when you have conviction at key levels and end up chasing entries, Then, you chase, you get a bad entry, it dips down, you're down 10% on an option play, and you cut it, only to see it, turn and go in your direction again. So you want to make sure your entries, are executed at a great level. That's why you want to pay attention to order flow and volume profile. And, mark off your key levels on your chart. And it's really easy to do if you study, market auction theory and order flow and volume profile. Those are the keys. And I've learned that from a friend that I started trading with, a little over, well, it's been a couple years now, I believe. But yeah, since he put me onto that and I started studying it very hard, it's just been it's been a game changer. And I was a successful trader before that, but this is so much better than trying to use indicators and all that other stuff. That's just nonsense. And especially since I started trading in options, it's really been really beneficial because before I was trading a lot of low float momentum stocks and things of that nature. So I've kind of gotten away from that. I'm strictly an options trader now, and that's what I love about the market. Like I said, you want to have conviction in your trades and not make mistakes. Execution is everything. Do not hesitate. Do not hesitate when you have conviction in a trade. That's what that meshes up your entire entry, and then you end up with a gambling mindset. That'll do nothing but get you blown accounts. At the end of the day, you cannot have a gambling mindset. As far as when defining your edge, all emotions must be left at the door. All right? You got to find an edge and stick to it. Being in the wrong state of mind can destroy your edge, and on these days, you'll do yourself a favor, just by taking the day off. If you're not in the right mindset, just take the day off. Don't bother even trading that day. It's not worth it. You're just gonna get frustrated and lose money. And of course, confidence. Confidence is a big reason why I'm a successful trader. I'm extremely confident when I take a trade. I've watched and listened to so many traders who are plagued by fear, that they missed the perfect entry into a trade only to watch the trade play out just as they expected. All right. And then, they're really irritated because they just could have made a lot of money. And instead, they sat on the sidelines and watched the trade that they were going to get into play out in their favor, but they never got in because of fear. This could be a nightmare to a trader's psyche and leads to future mental mistakes out of frustration and FOMO. Bad entries, being confident, and trading without fear is a learned skill. It took me at least a year to master that part of it. All right. So you might want to paper trade at least for a few months before you go to real money. But if you're ready to start trading with real money, just make sure that your mindset is there. Like I said, it took me a year to master that. I did at the beginning. I lost a lot of money, before I actually got it right and started making consistent profits daily. All right. So, I'm going to continue in my future content to discuss more of these important topics about trading that I've used and it was making me a successful trader. But I'm going to get into the charts a little bit tonight too and talk about the key levels that we've been working on. And, like I said, we just been killing this market recently. And it's been just an amazing ride. So let's talk about the ES chart right now. Like I said, we came up into that 38.90 zone that I've been talking about in previous videos. Popped a little bit over it to like 38.96 or so. And it got rejected back down under 90. And, when it popped back up into 92, if you missed the first entry, which, that's, we were just starting a position there. If you missed the first entry, it gave it to us again right here. And I was actually able to add some contracts in this spot, even at a higher price. But I had conviction in the trade, so I was willing to do that. And we have since seen the market tumble, nice pivot, back down under 3,800. And of course, the earnings on big tech did help us a little bit with this. But like I said, that's not the major thing that's moving the market down. It's a big piece of it, but at the end of the day, it's those dynamic traders moving the stocks down and moving the market down. And it looks like, kind of what I'm seeing is, it looks like people must have, the way I see it is people are probably selling to take Meta down. Some of them are selling Meta, and they're selling Amazon, because those just dropped so drastically, and buying Apple, because Apple ended up being pretty much flat. and it did pop up. It looks like it did finish up a little bit from where it was previously, but I mean, originally it dropped down to like 136 and it popped right back up into 146. So yeah, that was pretty solid move by Apple to regain its strength. But yeah, I mean, like I said, I'm looking for between 37.05 and 37.40, bring us back to the 20 DMA, which, you know, I am expecting an end of the year rally too. I've been talking about that in every single video. So, you know, we've been keen on finding the best entries and just letting the market waves ride. But yeah, I mean, as far as getting long, we'll see, because as long as we're on the 38.20, which I believe we are still right now. Yeah, we are. As long as we're in 38.20, bears are back in control. So over 38.20, then, you know, I kind of lose faith in staying in these shorts very much longer. But I am, you know, like I said, I'm short from 38.90, so I got room to play with here now. And that's why entries are so imperative. You know, I've already taken some trims off these, and I'm sitting pretty good. So I can let runners, you know, come back up. I'm not going to let them go to break even, but I can let them come back up, you know, 30, 38, 40 or so before I have to really consider getting out. Although, if we do start, you know, building value above 38.20 again, that I'll definitely get out. So right now, bears are in control. I think we see a lot lower over the next few days into the next week. I do think we're going to get that rally going into the midterms, maybe shortly after the midterms. But I definitely want to be getting long again, but, you know, before November 8th. That's kind of my plan anyways. But we'll see where the market's at that point. I'm not going to say to do that right now. It's definitely not the time to do it yet. Right now I'm still thinking short for the short term, and we'll see where the market takes us. And then once again, we'll follow. I'll take a look and see what the order flow and the volume profile looks like. We'll see where these dynamic traders are positioning, and then we'll make a decision. So right now we're just watching that 38.20 level, see if we can hold under, and like I said, 37.40 down to 37.05, and then we'll revisit. Alright, so let's also take a quick look at Amazon, because we saw it, you know, sell off pretty majorly in the after hour session, only to be picked back up and finish back up around 96. So we're probably looking at a pretty decent short off of that 97.98 level that it hit in after hours. However, I want to still be buying it in this zone here. You know, between like 61 up to like 88.40. And I did, you know, grab a nice little grave rob at the end of the day. I caught some under 90 bucks and already, you know, took some off at 97 and 98 in the after hour session. Nice little grave rob there. But yeah, I'm still going to be picking up Amazon down here. You know, some of these stocks are just getting in places where I want to be a buyer again. So I'm looking for entries on Amazon in these levels. And then we can also look at Meta. I started a position on Meta. I know Meta is just out of favor right now. But, you know, we're trading at levels we haven't seen in 5 years. So, and this company still has a great balance sheet. They still make a lot of money. Obviously, they're spending a ton of money on the metaverse. Some people, you know, are you know, excited for it, think it's going to be great in the future. Others think they're wasting their money, you know, wasting $10 billion at a time, basically. But, you know, I want to be a buyer here on Meta, you know, around under 100, really. I mean, I've started picking it up under 100. Buy it, you know, a dollar cost average in if we go any lower, down to like 80. So, I mean, that's kind of my levels on Meta as well that I want to be a buyer at for equity. I did see some option flow come in for calls for 2024 on several of these, including Google as well. You know, we've seen Google, Meta, Amazon. They have just sold off to levels we haven't seen in a long time. So, you know, I'm expecting buyers to step in on these pretty soon, especially if we get this end of the year rally. We're going to see these stocks rally as well. And I think they're in you know, value territory. Good places to start picking up. Of course, you know, if the market heads lower, we're going to see this head a little bit lower. And like I said, I'll dollar cost average in. Remember, this is not financial advice. This is my plan. Make sure you do your own research and due diligence before you buy any investments, especially on the equity side. So yeah, that's kind of what I'm looking at going into tomorrow. I want to see ES holding under 38.20 to stay in these SPY shorts. And as far as the Qs, I'm also short on the Qs from the most recent highs. So I really want to see them stay in this 11,200 now, because I mean, since it already sold off so much after hours and popped back up, I really don't want to hold these much longer if it gets back over 11.2 tomorrow, just because I'm already up so nice on them. So I'll probably cut those if we get back over 11.2, even though, I could really wait till 11.4 or so on the NASDAQ before I get out of the Q shorts. But that's kind of what I'm looking at. Since I'm in SPY shorts as well, I'll probably let the Qs go if we get up here about 30 more points overnight or so. We'll see where we open tomorrow, though. All right, but that's kind of what I'm looking at going into tomorrow. I want to stay short for the next couple days, see how the price action works out, and we'll go from there as far as getting long again. As always, thanks for watching my videos. I'm gonna have a lot more content coming out. Be sure to smash that like button, subscribe, and as always, check out our Discord. Get on the Bullprint Discord. I'm telling you, great analysts, great community. We have fun every day. We got the voice chat popping. You get a free week trial. I always have a link in the description of my videos, so be sure to check that out. And once again, thanks for watching. Make sure you go back and review those past videos too to see how successful these trades have been, and you can learn a lot following me. So I hope you'll smash that like and subscribe button once again, and I appreciate y'all for watching, and I love y'all. Thanks. Peace.